I would like to remind that this panel is part of the FIND project. FIND project is funded by the European Commission through the Horizon Europe program. At FIND, they made a very good job by working with a lot of different multiple European ecosystem to identify what really attract fintech investment, not only capital, but also diversity, inclusive and cross-border growth. That's important to know. And I don't know if you read, but they made a very nice deliverable called the Best Practice Collection, highlighting how smart regulation, proportionate supervision, and targeted incentive can really nurture and can be a very good attraction for investors. Sorry. Some key recommendation of that document. I will read them because I don't want to miss one word. It's to simplify market entry through digital and regulatory innovation, to create tailored incentive for fintech, build strong local ecosystem, and I'm watching Alessandra for that, and investors aftercare, and integrate inclusivity into every policy framework. So in short, the message in Europe is that we don't lack of innovation, but we need more clarity, proportion, and coordination to turn all the rule book into a competitive advantage. This has been said now. I'm very happy to welcome you, and I propose that you start to introduce yourself so the audience know you better.
Oh, thank you. Hello, everyone. I'm very happy to be here. My name is Marion Perez-Brio. I am a part of a law firm named Elco Legal, and I'm head of a fintech department in this law firm.
Hello, everybody. Happy to be here today. My name is David Manjarès. So I'm a general partner at Seventure. Seventure is a global investor. We have roughly €1 billion under management, and we invest from life science to digital, and I'm in charge of the digital part of investments. So we are a fintech investor. We have invested both in France and Germany in fintechs, as in France, Anytime, Expensia, and or Algon. And in Germany, we are investor in FlexVelop, SumUp, all this kind of thing.
So we have on stage a representative of the law, a representative of the investor. We are missing someone from the industry, but we'll try to cover the three aspects during this panel and the question. And for me, my first question is, we are talking about regulation, we are talking about predictable regulation, and we expect, or some people ask, that this regulation can be used as a branding tool. On the previous panel, it was said that it's something that Europe can sell in the world, is our talent to regulate. Do you think that it's something doable to use regulation as a branding tool and as a marketing tool? Maybe for you first?
Yes, well, absolutely. I really believe that a smart and predictable regulation can become one of the most Europe's strongest branding tool. To be that kind of branding tool, the rules need to be clear, it needs to be proportionate, and it needs to be consistent. So for me, that's the three main points of a regulation to be a branding tool, and Europe's greatest branding tool. We can have an example or a practical example with, don't know if anyone, I think everyone here is familiar with the DORA regulation. So DORA makes an harmonized framework and ensures that Europe now is a very good actor in cybersecurity and resilience matters. So yes, I really think that a predictable regulation, a consistent regulation, and a proportionate regulation can really be one of the European strongest branding tool.
And what's your opinion, David?
Yeah, as a venture capitalist, for us, what is good is to have, startups a lot of opportunities to develop. So in that sense, regulation should not be a good thing, but in fact, and especially in the fintech space, you need to have good rules to have a global and competitive landscape, which is the same from each member state to another. I will take an example, which is one we are using today when we want to commercialize or to find investors for our professional funds. We use an old directive, which was the Alternative Investment Fund Manager directive. So we just address the French regulator, Autorité des marchés financiers, and we ask to be commercialized in Germany, in the Netherlands, in any member state. So if you take one investor coming from the US, he has only to go to whether the German BaFin or the French AMF and ask to be passported in Europe, and then he can distribute and fund investors everywhere in the member states. So could be used as a branding tool to answer your question, because for an American, he has only to choose one country, and then he can spread and distribute its funds around Europe.
So you mean that the passport that exists in Europe is really an asset that can attract investment in fintech industry from outside Europe to Europe? Is something that you feel?
Yeah, I think it's a beginning, and I remember someone saying in the previous panel that it has to be enhanced, but still today it's possible to have a good aperture on Europe if you come from abroad, and to take, for instance, you go to Paris or you go to, Munich or Berlin, and then you set up your license and you can go throughout Europe through the passport.
Yeah, I really think that's a very attractive tool because, on a business, just a business matter, it means that you can access a very larger market and not only one national market. So it's very important that you have just like you said, all this regulation, harmonized regulation. So in the 27 countries of Europe, the regulation will be the same. So the fintech will have the same rule to comply with in every countries of Europe, and then you can have a strongest access with the access market with the passport and the regulation passport. And I think that it's only in Europe that you can have this kind of passport. Sometimes you have some kind of equivalence between two regulations, two nationals regulations, but it's not a passport, it's not a fast track. So I think it's very, very important too.
Okay, so this is an asset for fintechs, but if we talk about smaller players, I mean really startups, not scale-ups, this regulation and the supervision comes with a cost. If I take the example of Cosmin with the 1,200 pages that you have to digest before starting a business, what's the balance that you estimate? What's the balance between these rules that are attractive for large companies, or at least scale-ups, and the price for small companies, and so the price to innovation, because then it limits probably the innovation. What's your point of view on that?
Well, I totally agree with you. It's a very big concern. We all know that regulation comes with a cost, but this cost should not kill the innovation. So like I said, I really think that the regulation has to be proportionate. Well, it has to be proportionate, phased, and share. Proportionate, just like we said, you have to find the balance between the regulation and the cost. It's not only the cost; it's always also the weight of the regulation, because you have to put in place some very strong policies, very large policies. It takes time, it takes money, and sometimes the regulation is not proportionate with the size of the company, just like you said. So for me, that's the first thing. Policymakers, they have to find this kind of balance. Secondly, the regulation has to be phased, meaning that you cannot have a regulation that comes into force at one point and then big bang you have to be compliant with this regulation right now, at the time that the regulation comes into force. So I think it's very important that you have some kind of a scaled entry into force. Just like, I don't know if you know the MiCA regulation for crypto assets markets. We have what we call the clause de grand-père in French, meaning that MiCA, it's a European regulation, came into force in last year, in December last year. But you have, for some people, for some actors here in France, you have until July 2026 to be compliant with MiCA. So you have the time, to be compliant, to anticipate all these aspects. So I think a good regulation and a balanced regulation needs to be phased also. And then last point, the regulation has to be shared, like I said, because it's okay, it's a European regulation, but the policymaker and the regulator, they have to make sure that the regulation applies the same for every country, and you don't have like a national interpretation, because the assets that the passporting is, or the harmonized regulation is, just fail if you have a national interpretation. And I know that you disagree with that, so we're gonna talk about it. But I think it's important to have a phased regulation, an harmonized regulation. And we can think about some tools, some European tools, European compliance tools, for example, to make sure that everyone has the same, is regulated the same way.
Okay, and what's the point of view of the investors on that aspect?
No, it's true that you cannot ask a small fintech having just been funded with some million euros to have the same compliance as a bank or an insurer. So that's true. So I completely agree with the proportionality of, not regulatory burden. So it's
a burden. It's a burden.
to be adjusted at the level of a startup or a big group. But I think there is also a way for this level of compliance to be accepted, to be implemented at the startup and the more bigger company level, is to have a kind of sandbox phase where small companies, especially fintechs, can try to develop things without being too heavily regulated. So that means that for the regulator to accept a kind of phase where things have to be tested, and then when they analyze better the risk which is brought by this innovation, then they can regulate. So
yeah, indeed, but if we take the idea of the sandbox compared to the harmonization of the regulation and the proportionality of the supervision, so far, unless I'm mistaken, all the sandbox are national. There is no European sandbox. So it means that it's the goodwill of the local regulator to implement or not a sandbox. So it creates disadvantage to some countries who doesn't have a sandbox. So it's a hurdle for creativity. But I will stop on that because we are running out of time, and I would like to ask you a question on the competition of very big companies. We say the GAFAM. They are active in fintech and they want to come much more in that industry. What do you believe the regulation must play a role on that? Do we need to build walls to protect ourselves, or do we need to open our market and maybe to be naive? What's your point of view, David, on that aspect?
No, it's true that these big techs have tremendous amounts of data on consumers, on businesses, and with if they enter at full speed the European market, especially in the fintech space, they could be very dominant. They are already dominant, but they could be far more dominant with their offers. And so it could also damage the fintech innovation in our countries. So, and there is this discussion with FIDA, with the FIDA regulation, not in place but in discussion, where you can see that, I say at the level of the European Commission, there is a discussion on prevent maybe big techs to be part of this regulation as they were a classical player, but they would ask these big techs to accept some special rules for them, not to overcome everybody in this fintech space.
And your point of view on it?
Well, my point of view on that is I totally agree, but I think that we don't have to fight the GAFAM or these big tech. I think we have to make sure that our regulation makes Europe or the European market contestable with all these GAFAM and all these big tech. So maybe it's a little bit naive, I think, but I really think that we don't have to fight the GAFAM. We have to, like I said, make sure that we can contest with them. And if you lock up all the European players into very, very, very heavy regulation, don't think that you make them contestable with the GAFAM. So, like we said, the GAFAM, they have a tremendous amount of data that they can use. The data protection in the US, it's just right not the same as in Europe. I think that we have to neutralize this kind of lock-in that the GAFA has on all the data and all the data the way they are using this data. So I don't have the answer. I don't have the clear answer, but my point is that we cannot act like fighters against this GAFAM. They're big. Sometimes we say they're too big to fail, but it's not because we are just European players that we cannot, have our role to play in this battlefield.
So I'm asking, I'm quite curious. So should we put a wall for GAFAs or not?
Sorry, I didn't.
Should we put a wall for them to restrict their presence in the European market or not?
No, I don't think that we should put a wall on GAFAM. I think that we should ensure that European players, they can contest with the GAFAM. So we have to propose...
So it's on a positive side. Let's nurture the fintech in Europe so that they can beat up Google, Facebook, Visa, MasterCard. This is what PSD2 tries to do, yeah? PSD2, PSD3, FIDA tries to do. Let's beat them up, because in the end, from the investor point of view, if I'm putting the head of the investor, I invest in a company that wants to be the Google of the world. So if I'm killing right now the Google, so it's like kind of contradictory. If I want to support the company, but then in the same time create precedents for this company when my company that I'm putting money into it will be barriered by the same idea. So let's help the startups be Google, not block Google.
I totally agree with you on that.
Thank you very much for your discussion. It was a very nice discussion.